So, welcome everyone to this second session of our live talk series on risk management for agri-SME finance. My name is Michael Van During. I'm the technical specialist for the SAFIN Secretariat. I suggest that we start the session on time today because we have a lot that we would like to cover and relatively little time to do it all. This particular session is the second in the series, and we'll focus on case study analysis, providing examples on risk management for agri-SME finance. To quickly go through the co-hosts of this series. They include the SAFIN network, which brings together 50 institutions who share a commitment to accelerate access to finance for small and medium agribusinesses. Also co-hosting is the ILO's social finance program, which works with financial sector actors to enable it to contribute to the ILO's decent work agenda with an emphasis on social justice. In addition, we're joined by PARM, the Platform for Agricultural Risk Management, which is a G20 global partnership that provides technical support to governments of development countries for the integration of agricultural risk management. And finally, the series is hosted on the platform of PARM-D, which is the Forum for Agricultural Risk Management in Development, and is a community of practice managed by PARM for knowledge sharing on agricultural risk management. So next slide. Before we get started with the presentations, just a few logistical issues to mention. First of all, we're going to have a Q&A following the upcoming 3 case study presentations. What we suggest is that for any questions that you may have regarding these presentations or more generally, please put them in the chat. The chat box is permanently available on the right side of your screen, and the questions will be compiled and will be presented during the Q&A session. Second, there will be 2 polls during the webinar. They will also appear on the right side of your screen, and the first one will appear just as I finish this welcome message and before the first presentation, and the second poll will show up at the end of the 3rd presentation, right before we get into the Q&A. Also worth noting, we have an evaluation that's going to be run at the end of the webinar. So before leaving the room, every audience member will be asked to respond to a quick questionnaire to evaluate the session, and that will also be on the right side of your screen. Sorry. And in cases of any technical issues, we have web support that you can access on the chat by sending messages directly to the PARM-D live host. One note on the presentations, just so you know, because we have time constraints, we have 15 minutes for each. This means that the pace is likely to be pretty quick. For anyone who is interested in learning more, the presentations themselves can be shared at the end of the session. So in terms of the webinar objectives, the series itself has 2 main objectives, which are really, first of all, to assess the overall offering as well as the limitations of the agricultural risk management toolbox in light of the ongoing experience with COVID-19. And this is done by listening in particular to the perspective of agri-SMEs and agri-lenders. So the second objective is to advance practical learnings by reviewing concrete examples of the use of selected number of tools and approaches for risk management and pricing, and risk management centered on agri-SME and agri-SME finance providers. And the idea is really to look at the impact achieved through their use. So in terms of the series, we've had a first session, Live Talk 1, which provided an introduction to the agricultural risk management toolbox and was followed by a panel session that brought together a diversity of experts that shared their particular point of view and experience in the sector. And this second session is going to focus on case study analysis to present some concrete examples of financial service providers' approach to managing agricultural risk when addressing the needs of agri-SMEs within different value chains. And finally, we'll have two more sessions upcoming, probably next month, and perhaps the following one, with the next one more focused on case studies targeting agri-SMEs themselves and how they manage risk, and a fourth session to close and discuss the way forward as well as specific innovations. Now, in terms of the agenda, as I said, packed schedule, so we're going to move on to the first presentation as soon as I'm done here. We'll have two more of those, 15 minutes each, before we jump into the Q&A for about 20 minutes. And finally, we'll hear some conclusions and closing remarks before we close up the session. So without any further ado, I would like to introduce the first poll. And the question here really is to try to understand how best financial service providers should focus their work and activities and actions to better address agri-SMEs now, during the crisis, and in the future. And the solutions or the options here are either to really double down on innovations, particularly in terms of tech-enabled solutions, digital solutions to lower the cost and extend their reach, or develop their ability to effectively assess and quantify agricultural risk, better understand this risk, and try to address that risk perception issue that we hear about all the time. Another option is to develop products and services that are better aligned to the actual needs of agri-SMEs, which could also address risk, or better communicate to agri-SMEs how investment decisions are made. How do FSPs function? What is the language that they use? How should agri-SMEs work with them? And finally, another option would be to more actively look for partnership opportunities with other community members, including government actors or other development institutions, to work together, potentially share risk, develop innovations, and develop expertise to better address the needs of agri-SMEs. So please vote. We have 10 seconds remaining. So I think it will take a few seconds before we can see the actual results. And once we have those, I'm going to pass it on to our first presenter, who's Anil Kumar, SG, founder and CEO of Sammunati, and he will be sharing with us the approach that Sammunati takes specifically to address these risks. And looking at the poll results, interestingly, we have a bit of I'd say mixed results with almost a tie throughout all of the suggested options. So thank you for taking the time to answer that, and I'll pass it on now to Anil.
Okay, so it's wonderful to be here and be given an opportunity to share our work and our perspectives of risk management. If you can get into the next slide. Samunnati is an entity that is focused entirely on agriculture and is in the process of creating a value chain proposition to lending and market linkages activities that happen in the value chain proposition of agriculture. An entity like this does not exist in the Indian landscape, which combines both finance and market linkages. And in addition to that, we also work with a lot of community-based and farmer collectives, and institutional development becomes an integral part of our engagement with our constituents. In little over 5 years of our existence, we have been able to do a reasonable job on the scale. Because we are talking of risk, I quickly wanted to mention the scale as well, because when you rev up the engine and accelerate the business model is when risk becomes an integral part of how fast and how soon and how much of scale you can bring about. So we have done about $600 million of disbursement so far with a credit cost of less than 1.5%. We work with about 500 farmer collectives, which in turn have a membership base of about 4 million smallholder farmers on the supply side of the value chain. And we work with about 1,000 agri-enterprises on the demand side of the value chain, backed by pretty strong investors. The model that we are pursuing is a business to customer model, in which the middle B represents the aggregator. And aggregator for us is a player in the value chain who brings in two capitals for us. One, the social capital, which is the soft information and the information about the customer, which cannot be got through documents, which is critical when you are serving a smallholder farmer. And because we are pursuing a value chain finance proposition, these interactions that are happening between the buyer and seller in a value chain are happening in the context of either supplying milk or selling paddy or what have you, in the context of the commodity that you transact with. And the transaction history lends to another capital called trade capital. So from Samunnati's perspective, whom to lend is a function of social capital, and how much to lend is a function of trade capital. Because there is this information asymmetry that exists in the market from most of the formal financial institutions' perspective, what Sammunnati has built is a structure where you triangulate the formal information with the informal social capital and trade capital that exists. In addition to that, we also bring in deduction at source structure so that you are integrated well in the transaction that we are funding. Next slide, please. On the value chain structure, we are a working capital provider, and the hypothesis that we are pursuing in our mission to make markets work for smallholder farmers is we intervene at the demand side of the value chain. And one of the biggest constraints when you look at the demand side of the value chain is where the buyers and sellers are starved of working capital. The moment you remove the working capital as a constraint, the number of transactions or the throughput expands significantly. And add to that the cyclicalities and seasonalities that agriculture as a sector represents, there is a significant uptick to number of transactions that could happen if you remove the working capital constraint. Once that happens, the buyers and sellers indeed will be looking at newer ways of procuring their produce is when we want to bring in our farmer collectives from the supply side of the value chain. So we are more an internal player in the value chain where finance plays the role of an enabler, and the market linkages are the ones that bring the producers and the consumers together to meaningfully transact. The philosophy of risk management that we are pursuing is how do we manage the risks of our customers, because we are a working capital company, we are a transaction-led company, and hence managing their risks become the risk management philosophy for Sammunnati, and that's where most of our structures are customized. We have products ranging from 1 day to 5 years, and quantum ranging from less than $100 to $1.5 million. That's what we have been pursuing as a model. Next slide, please. So in terms of the different dimensions of the model, each aspect of Samunnati is built on the premise that we need to be having a deep domain expertise, both in the value chains as well as the geographies we operate. So we work in about 54 value chains, and each of these value chains are selected carefully from the perspective of both the agroclimatic zones as well as the trading centers that represent each of these value chains. In addition, while Samunnati characteristically is more a lending organization with the senior management having more than 600 years of banking experience, what is more critical for us is, can we also bring in the domain expertise of agronomists, domain expertise from people who procure the agri commodities from the market, so on and so forth. So there is a rich mixture of people who know how trades happen in an informal manner vis-a-vis the bankers that we have. Every trade has four risks that we have: the quality risk, price risk, storage risk, and the transportation risk. None of the structures in Samunnati take these risks, because we believe that the players in the value chain, like buyers and sellers, they are better equipped to mitigate these risks. Our goal is more to make these transactions happen in a way where the risk is mitigated through the transaction structure, rather than Samunnati taking speculative positions or exposing itself to any of these risks. So none of these four risks are taken by Samunnati, not because we are risk averse, but because they are better equipped to take that risk, and we enable them to take that risk, playing to the strengths. Next slide, please. Right. Whenever we look at guarantee structures, because these are one of the ways in which we are looking at creating a risk mitigation to the farmer collectives, we have two kinds of guarantees that we work with. One is the first default guarantee, wherein the pool is guaranteed to an extent, notwithstanding the individual losses. The second structure that we have is what we call the pari-passu guarantee, where of every default that you have, portion of it gets guaranteed. And the guarantee structures that we have, which I'm going to show the next slide, is a combination of a first-class guarantee and a pari-passu guarantee. And the reason why I'm sharing these two examples, one of them is on the screen, is how a well-defined and well-structured guarantee can enable newer entities and smaller nascent entities, getting engaged by a formal lending institution like Samunnati. The guarantee structure that we have with Rabo Foundation is to enable credit to nascent FPOs in multiple geographies, and this is a pari-passu guarantee to the extent of 33%. And we have been able to reach 60 new FPOs, farmer producer organizations, farmer collectives, on account of this guarantee. And this has been a significant driver to many of the formal lending institutions that lend to Samunnati as wholesale, riding on this guarantee structure. The next guarantee that we have, next slide please, is specific to agroforestry, where the value chains include the areas where the forest cover either is protected or protected from depletion, like cocoa, cashew, areca nut, coffee, millets, so on and so forth. Here, the program is specific to the value chains, and the objective of the program is, can we bring in focus on these activities, or can we bring the focus on retaining the green cover from the agroforestry perspective? We have been able to, the guarantee is less than 9 months old, we have been able to reach out to about 19 such specific value chains to be able to lend to entities through wholesale, thanks to these guarantee structures. Next slide, please. Where we think Samunnati can play a role with this kind of an experience with these two guarantee structures, as well as the risk management philosophy of managing the risk of the client, is, can we look at creating a pool of risk capital that is designed to enable flow of credit from formal financial institutions to entities that usually are assessed in traditional means, and can we bring in that risk mitigation tool? And we believe that development financial institutions, not-for-profit CSR companies, as well as philanthropic organizations have a significant role in creating this pool, and Samunnati also has a foundation wherein part of our profits can go into creating this pool. And the next slide talks about one area how this pool can happen. We will be leaving this presentation with you, and I will not be explaining each of this in the interest of time, but all that it does is create a first-class default guarantee, so that the mainstream lenders would know that the loss given default in a specific activity is covered by a multiple, and the credit cost, as I mentioned in some of this model so far, is 1.5%. Even if you take 7 times or 8 times of the multiple of credit loss, if you have a FLDG, the first loss default guarantee of about 10%, the formal lenders would know that their risk is adequately covered and would be more proactively looking at lending wholesale. The next slide talks about the bridge guarantees. Many of the government schemes that are designed to benefit the smallholder farmers usually come with a reimbursement structure on account of being able to control the end use. And most of the smallholder farmers don't have the capital to invest upfront to be able to access those services. So what we are looking at is put together of the risk pool that I mentioned in the previous slide, put together a small bridge guarantee in which some of these schemes can be made accessible to the smallholder farmers or farmer collectives by giving money from this pool, providing as a bridge for them to invest in the activity that has a subsidy eventually after you invest, and then pool such projects into 10 applications, 20, 30 farmers coming together, and then make a batch process. And as soon as the subsidy from the government is released on a reimbursement mode, the guarantee would get replenished. We believe a lot of government schemes can get better utilized by a bridge guarantee rather than individual farmers investing or not taking advantage of the scheme. The next slide talks about the subsidy guarantees, wherein you bring in many of the formal structures that you have, wherein either it is NABARD, which is a National Bank for Agricultural and Rural Development, or Small Farmers Agri Consortium. There are specific schemes that the farmer producer companies have on matching guarantees as well as on infrastructure creation. But the problem with that is there will be an eligibility criteria for an entity to be eligible to apply for that. And that eligibility requires a kind of hand-holding the entity to reach the eligibility criteria. Sammunati is looking at engaging with different organizations to build that capability to be eligible to receive these guarantee programs. It could be on account of number of members, it could be on some turnover criteria, or it could be on the composition of gender in terms of men versus women, composition of board. Whatever is the eligibility criteria that makes them eligible for the subsidy is something that Sammunati will work with the farmer collective, make them eligible while hand-holding it, and that entire thing can also be put together as a guarantee program. So these are few examples that we thought we would share in the 15 minutes that we have. But what we are realizing is an entity like Sammunati is playing not only the role of a lender, but also playing taking the interventions. Needs to be an internal player in the value chain, needs to be a partner, and this played a significant role during the COVID times when the lockdown happens. 85% of our portfolio is in the essential commodities, and a lot of essential value chains got working capital. We did about 20% of our overall disbursements during the COVID times without any interruption. And being an internal player in the value chain and being able to bring in these guarantee structures and the risk management philosophy helped us a great deal. So I stop here. Happy to take questions later as part of the program. Thank you very much for the opportunity and time. Have a wonderful day. Thank you, Michael.
Thank you, Anil, and thank you also for being so efficient with your time and really delivering so much information. Actually, that was extremely interesting, and I look forward to hearing some answers to questions on that. Let's move on to the next presentation by Rashid Darago, who's the project manager of the Togo-based incentive scheme for agricultural financing based on risk sharing. So Rashid, up to you now.
Thank you, Mr. Michael, and good morning, everybody. I want to share the experiences of MIFA. MIFA is Agriculture Financing Incentive Mechanism based of sharing risk. So on this presentation, I want the first time to talk about the mission of MIFA, and then the second time I want to share the agriculture import kit operation. So in this part, we will talk about the role of SMEC in the three-part agreement, and then I will end with the agriculture risk management tools. Next slide, please. MIFA is created to 2018, and then our general goal is the organization, the link of agriculture value chain. The second time is promoting the financing of agriculture value chain, and then to promote also agriculture insurance. Our fiscal goal is to promote financial and insurance products, and then we will provide technical assistance to financial institutions, small and medium-sized enterprise, and small and medium-sized industry. So our mission is to develop the mechanism to mobilize resources to financial the food chain. Next slide, please. MIFA has 5 pillars. The first pillar is sharing risk. So in this pillar, MIFA work to reduce all the risk, to share it on the long of the value chain. The second pillar is insurance. Insurance is very, very important of MIFA because we want to protect the load provided by financial institutions to agriculture value chain actors. The third pillar is about technical assistance. We want in MIFA to work with the farmers, and then we will work with the institution, financial institution, and then we will work to the all other actors in the value chain. The next pillar is about reducing interest rates. This is very important to MIFA because in the past the interest rate is 18%. Now with MIFA we want to work with financial institutions to have a rate low like 7.5%. That's why in the MIFA we are working. And in the final pillar is about sensitive measure. You know, if the farmers we want to give them the grades. We want to hint them to have a good loan strategy in the agriculture. That's why we want to work with these pillars. The pillars of MIFA is very important for us to improve and then to accompany all the actors on the agriculture, the law of value chain. Next. This slide we want to share with us about our agriculture response plan to COVID-19. It is about agriculture import kits. You know, in this response to the response plan, we want to help 2,000 farmers to benefit from these inputs, agricultural inputs. The first thing is the selection criteria. The first one is Togolese. The first one, the farmers want to be the Togolese, working on 1 hectare 1 hectare, and then these farmers will necessary to into solidarity groups. This solidarity group is about you have the Association of Cotton Farmers, or if you want to be smaller and small SMEs, buyers or processor. The third point is to accept to sign the contract with MIFA, and then the second is to commit to grow 0.5 hectares maize or rice or cotton or soybean. And so the first point is to follow the technical supervision of approximately. So MIFA as the agent in all the country. So this agent, their job is to help farmers to the technical support. That's why government of Togo made this response plan to COVID-19. Next slide, please. About this, this is our plan. This is the strategy. The strategy to make this agriculture response of COVID. About that, I want to share with you the role of SMEs in the tripartite agreement. The first one is the first role is input suppliers. In the agriculture SMEs, as input suppliers sign with MIFA agreements and the producer, the farmers. So the SMEs act as input supplier by ensuring compliance with the specification of the products. In the second role of SMEs in this plan is purchasing agriculture inputs. In this role, we will sign the agreement with the aggregator as SMEs, and then with producer. So SMEs act as buyers and agriculture input deliver cooperative as aggregator with the guarantee of purchasing their production. Here, at the end of the production, the SMEs return the quantity of the products corresponding to the production process contract and reimburse MIFA the input credit grades to the cooperative. Then the SMEs pay the scoops the remaining amount the process collects. That's the two roles of SMEs in the plan, the plan of COVID about agriculture input operation. Next slide, please. So now I want to share with you the risk management tools that will improve in this mechanism. The first one is the low guarantee. You know, in the MIFA system, we want to coverage the credit at 50% by the guarantee, and 50% is covered by the farmers or by the agriculture actors. And the bank is the system, and the bank in the system risk, in the system of risk sharing. If necessary, we have now the sovereign guarantee of states. You know, now our government give us the power to use the sovereign guarantee of state. So if MIFA MIFA guarantee is not big, so we have the possibility to use the sovereign guarantee of state. The second management risk is financial risk. Financial risk is very, very important. As I said in in my presentation, we work to have a very low interest rates. So in this mechanism, in this COVID period, we use zero interest rate application. This way is very important for us to help the farmers who have some problems with COVID periods. The third one is the risk of bad selling. So guarantee of by signing of aggregation contract between the MIFA aggregator and the producer is very important to us to guarantee the risk of bad selling. So in this agreement, we have selling price and other details of the product, like as quantity, quality, delivery condition, etc. The next one is technical deficiency. This one is very important for us because MIFA works on this. Guarantee by technical support for MIFA agents on the field, securing the supplies and quantity and timely agriculture inputs, training producer and consulting support and to the product cycle, building the capacity of stakeholders. That's our activities on the field with the farmers. Next slide, please. I want to end with another risk, insurance. Now MIFA is working about to the insurance product. By now, we want to make for the agriculture insurance to protect agriculture activities from the consequence of climatic hazard and natural disaster. So we are working to the health insurance also to cover and other risk covering risk related to the physical integrity of farmers. And the third insurance is a passion insurance. So this passion insurance is what we call it a replacement income. This fund, we want to provide alternative income for farmers on their old day. This passion insurance is managed in the form, and then we want to share it with the farmers on the farmers in the agriculture value chain. So I think this is the end of my presentation, and I want to say thanks of everybody. And if we have some question about our presentation, we are here, and then we will be here to do it. Thank you very much. Bye bye.
Thank you so much for that. Also very interesting presentation and quite succinct. So let's move on now to the third presentation, which will be given by Marise Blom, the Chief Operating Officer of Scope Insight, and Henry Bruce, the Research Director at the Center for Financial Inclusion. It's on to you.
Michael, and it's a pleasure to be here. So we've heard some great examples about how product adaptation and partnership innovation can help share risk and expertise across the sector. We started from a little bit of a different perspective, looking at how we can address the information challenges that exist between lenders and agri-SMEs, and how we can help effectively assess and quantify risk. So the work that we've been doing this year is to identify a set of bankability metrics that can hopefully bring perception a little closer to reality for lenders to agri-SMEs. So on the next slide, just a little background. I'm sure this is something that's all very familiar to this group. Agri-SME finance is a significant gap. This number is for sub-Saharan Africa alone. Globally, this is a huge challenge that ultimately hampers critical food production and rural employment. We see the challenges that agri-SMEs have in formalizing their businesses, and lenders are constrained by this perception of risk around lending to agri-SMEs and the challenging environment that they have to get that information. And as has been shared in some research recently by CFI, we see these challenges increasing in this current environment. With the pandemic, with climate change, this is only going to get the need is only going to get greater. So on the next slide, the information challenges that we have been we identified and have been validating as part of our research this year are of course interrelated between the agri-SMEs and the lenders. On the agri-SME side, we see a lack of standards to measure financial and operational management, resulting in it being difficult for them to meet lenders' requirements, and limited capacity and capability to make lenders aware of their organizations to seek that financing that they need. And we see this from our work with the Council Smallholder Finance that agri-SMEs are missing from lenders' pipelines, and we see a lot of that across their portfolios. On the lender side, it's a lack of performance benchmarks really prevents these lenders from performing cross-market comparison, and that shows up in the time it takes to perform this initial due diligence and the level of accuracy that has. See some imperfections, a lot of variation in process on the lender side, as well as missed opportunities. So these agri-SMEs are difficult to find, particularly the viable lending opportunities shows up in the deal flows being narrow and homogenous. The same organizations are getting more lending, and the gap, those that need finance are continue to be left out. So these are the challenges that we've been working on and been validating with our research this year across lenders of all different types, as well as those who are supporting agri-SMEs. So on the next slide, then we have started to, and are a long way. This is kind of our framing for the solution. These bankability metrics, that a common language and better data, that fits that standard, will benefit ultimately all stakeholders. And I think a few of the things here that we've identified specifically start with visibility. So how can we provide lenders with visibility to these onto these agri-SMEs and these new and diverse opportunities? How can we support comparison by lenders between different agri-SMEs, and by collating a data set that conforms to these standards, we can start to think about benchmarks and baselines for the huge variety that exists within this sector, and so by no means least, thinking about how these bankability metrics can contribute to decreasing the cost and risk for lenders to agri-SMEs. And we think about that in the context of the perception of risk and how more accurate, more comparable information can bring that perception closer to reality and increase the opportunities for existing lenders to agri-SMEs, but also new lenders who maybe haven't thought about or haven't explored this sector, these lending opportunities so far, but with this better information base can be encouraged to do so. So Marita's going to talk a little bit about the framing for these metrics and where we've got to with our research this year.
Henry, thank you so much. Yes, on the next slide, you will see that these bankability metrics that Henry has been talking about, how they can sort of bring two parties together who often don't really speak to each other a lot. And that's on the lending side on one side and the agri-SMEs on the other, because sometimes there's this sort of misconception on how to come together. We have been working as Scope Insight. We have been working on professionalizing agribusinesses, because I think that's one part of the issue that lenders often see, that some of these agri-SMEs are not ready to be bankable. So we've developed different tools to measure that and to increase that professionalism. That we've done in the past 10 years, but we also realized that that wasn't the complete solution, because do we connect that to the lenders? And that's where we started this partnership with CFI to really see, okay, where does that connection need to come from? And where we believe that with our scope assessment tools, where we have scope scores and things like that, a common language is the issue. It's really, if you have a common language, if we all talk about the same things, then that is how you can make connections. So in the past year, we have worked together with CFI, who works a lot with the CSAF members. We've done many, many interviews with lenders and really looked at what is crucial to make that pre-selection for these lenders. And as you can see on the right-hand side, the financing of agribusinesses is not only done by formal commercial financial institutions or local financial institutions, microfinance institutions, but also by value chain players. So all those players together can use these bankability metrics to either make it possible for the connection to be made between lenders and the agribusinesses, or to lend themselves. And this year we've come to these bankability metrics, which will be, this project was funded by Agri, by the way, and this report will be published before the end of this year, if all things go well. And with those metrics, our goal is that next year, and maybe then we can go to the next slide. So how does that work? Because only having these bankability metrics will not work. It will require really, a joint effort to unlock this agri-SME potential. So that's, and it's, in these COVID times, I think that's even more important now. So what does that mean? First step is really the practical use and adoption, but then at scale. So I hope that all the parties today on this call will really also look at these bankability metrics, provide us feedback. We have a survey out there that we want to collect information on, if this is some information that could help all parties who are active in providing financing. So, but it also will help that part that we have as Scope Insight been working on already for the past 10, 11 years, that graduation of agribusinesses. Because a lot of parties who help agribusinesses don't actually know what it means to be bankable. What is that? So that, we hope that this will also help there. So a more focused graduation, getting these organizations to be bankable, bringing down risk, and for lenders to pre-select if we have a pipeline of these agribusinesses, to pre-select those that meet their criteria. So that also will decrease costs. Henry already mentioned the fact that it's very difficult to get this information from the agri-SMEs. So how do we get that? How do we collect that? And that's something that we want to convene, and in the hopefully next year we will also sort of pilot a sort of a platform where we can make these connections and use these bankability metrics to, as a linking pin, connect these agribusinesses and lenders of all kinds. So with that, we hope that the service that these lenders provide to the missing middle, hidden middle, there are different terms for that, but that we finally can unlock that part and really provide these services that these agri-SMEs so greatly need. When there's more adoption of these bankability metrics, of course, they will be refined. Then maybe there need to be metrics specifically for certain crops or regions. That's all something that we are going to continue doing in the next 2 years. But then what we also need are influential parties. So the larger funders, donors who really have a lot of influence to help for all of us to help adopt these metrics, so that it's more aligned. The more aligned we are, all parties around the globe, especially for these agri-SMEs, the better information we have, the better we can learn what works and what doesn't work, and to bring down that risk and the cost of getting that information. So in the end, we believe that it's our aim that these metrics are like a common language or a standard that really can make those connections between all stakeholders that are in this field. And I know that there are many of them. So I think there are many of them, and we already see this on this call, that there are so many ideas and things. And some of them ideas that I've heard could potentially also be channeled through such a platform using bankability metrics. So thank you for the time and the opportunity to share what we have done this year and also our ideas for the future. And I hope that we can make some connections, because I think it's really about aligning all the activities that we do. So it was great. Thank you. Thank you for your attention.
Thank you. Thank you very much, both of you. Sorry, I hope you can see me. That was also very interesting. Obviously, still a project that's very much in the works, and I think that all of us are very keen to see rolled out and start getting some sense of the impact, relevance, and importance that, or certainly the potential that we see for it going forward. So the next session here, now that we've closed up with all of the presentations, thank you again to everyone for really sticking to the time. We have a quick poll coming up, but before we do that, and while we're going through this, I just want to remind everyone that the whole point of this is really to present these approaches in order to spark a discussion and exchange some ideas and ask some questions. So, please, if you do have some questions, put them in the chat, and we will address them in the next session now in the Q&A. In the meantime, we have a second poll here, which is really to try to assess from our audience and everyone participating here what their sense is, given how the pandemic is reshaping the approach and the understanding of agricultural lending by financial service providers. On the one hand, it's been, testing their portfolio health. It's been testing their ability to grow, to innovate, but it's also, moving them forward towards new approaches and potentially, changing things drastically going forward. So there's a bit of a delicate balance being played out, and probably not equally everywhere in the world. But overall, the question here is whether you think that financial service providers will come out of this crisis with you know, an appetite to increase their exposure and their ability to effectively service the agricultural sector? Will they, you know, maybe just continue addressing it in the same way and have a bit of a status quo? Or do we expect that actually, you know, the risk brought on by COVID might actually lead them to decrease their exposure going forward? So those are the three options here for this poll. And once we've answered that, we're going to move on to the Q&A session, which will be moderated by Ilaria Tedesco, who's the Senior Technical Advisor at PARM, the Platform for Agricultural Risk Management. So thank you.
Thank you very much, Michael. And I would like to thank all the presenter for this the interesting presentation that they made. It was very interesting to hear about this initiative, and also it's food for thought also for a future that hopefully will take also COVID as an opportunity to differentiate the business. For example, in the answer of this polling question says that probably the pandemic will increase the exposure of financial service providers to agricultural lending and introducing innovation to better serve the agricultural sector. And this seems to be a good news. So I would like to start the Q&A part of this webinar asking the first presenter, Anil, if he agrees with the coming up of the poll, if he also thinks that the service provider will increase their exposure and introduce some innovation, and if there is any innovation also that Samnati has introduced with the COVID, and if in particular there is also some value chain that poses some challenges, or is an example that is interesting to bring to the audience. Anil, I would like to ask you to keep your answer within 3-4 minutes to also give the floor to the other presenter.
Sure. No, I completely agree with the outcome of the poll that the pandemic indeed has opened up much scope for innovations in the Indian agri space. Two things have happened significantly. One, the realization that essential commodities are essential for a reason. They are not categorized as essential without a reason. Second thing that also has come about is there were two changes at a policy level that the government had to take, which were important but were not getting the attention prior to pandemic, and all those changes suddenly became urgent, and the government of India proactively brought about legislative changes, policy level changes to unlock some of the constraints that the farmers and agriculture value chains had. And these changes are already showing up in a lot of smoothening of the movement of supply chains between the states. Where we see a significant traction happening is on the startups in agriculture as well as on agri-technologies, because the use of smartphones in India has proliferated in the rural areas as well, and we see a host of active companies using technology coming in and trying to enhance two things. One, ability to bring about productivity in agriculture. Second one is how do we make the monitoring and reach for agriculture products to the farmers. Now, what we are doing at Samnati is we are playing a role of an ecosystem player, because we realize that given the given the potential and the extent of problem that we are solving, it's not possible for one entity to do that. And being a collaborator, approaching an ecosystem way is a better way to handle it. So we have set up a new platform that we call Samarham, which is a new beginning in Sanskrit. And this is a platform for all startups in agriculture. We being a startup, we have already supported 35 startups since our inception. And we also have, after the starting of the platform, about 60 new startups that have applied to Samunnati as to how they can, one, get customized financial services, two, market linkages, and most importantly, access to the farmer collectives for their products. And the last point that I would like to make is, one of the significant learnings that Samunnati had is when there is a crisis, the borrower needs to consider us as a partner, not as just a lender. And what we did is we engaged with both the farmer collectives and the agri-enterprises as their potential partners and brought about a platform of linking buyers and sellers, and we brought in our working capital as an enabler. So we certainly see agriculture to be one of the bright spots post-pandemic in the Indian context, given that we are the largest producer and consumer of very many agri-commodities. So I pause here. I completely agree with the outcome of the poll and what people are thinking on the poll.
Thank you. Thank you very much, Anil. I would like to pose the same question to Rachid. If he agrees that on that, and plus another question that is coming from the audience is about the sustainability of MIFA, about this zero interest during this time of COVID. If can be sustainable in a situation post-COVID, how can be this maintained? And if there is also here some particular challenge that regards some value chain in your experience so far. Please, Rachid, the floor is yours.
Thank you. In our experiences in Togo, you know what I said in my presentation. MIFA is created to facilitate the financing in the agriculture. In the past, in our country, the statistics say that 0.2 credit goes on the agriculture. 0.2% credit goes in the financial agriculture. So the agriculture in our country is very, very important for us because the agriculture contributes in our GDP. GDP as 40%. So it's very, very important to us to finance the agriculture. That's why MIFA has been created. So the first thing is very important for us is to have the interest rate so low. That's our challenge. Because in our country, the financial institution made the interest rate very, very low, very hard, because there are so many risks in the agriculture value chain. That's why now MIFA works to reduce the risk. The first risk I say that is the bad market, the bad sale, because if you produce and then you don't have a market, it's very, very difficult for the banks to give you the money. It's very, very, very difficult. So MIFA works to increase, to develop market systems. This is the first challenges. And then the second challenge is the agriculture insurance. This one is very, very important for us because, in our country, you have some risk natural risk to have a rain or not to have a rain. All our products are based on the rain. That's why it's very important for us to have a system the system to protect our agriculture value chains. That's the two challenges I want to share with you. The first one is the market to have a market, and then the second one is have the insurance of agriculture value chain. If you have another question, I'm here, and then I will try to answer you. Thank you very much.
Thank you very much, Rashid. Let's have first a question for Maryse and Harry, and then we see if we can have more questions. For Maryse and Harry, the first question can be related to COVID. Says if these metrics has been changed during this pandemic, or if takes in consideration also this type of risk, and if this is putting more damage, to small and medium enterprise. Moreover, another question is if this bankability measure has been already tested in some countries, and who is going to pay for this kind of information if you already received some interest from banks or lenders about the product that I understand is not already in place. Is that correct?
Maybe I can take the portion on the kind of the sustainability. Maryse, maybe I ask you to respond to the question on the testing of the metrics and the kind of changing in the context of COVID. So that's right. The portal solution, which is only, as we see it, kind of one output, one kind of conduit for the metrics, is indeed still in its early stages. We're hoping to be able to start prototyping that with kind of select lenders and service providers and agri-SMEs early next year. Our hypothesis at the moment is that there is willingness to pay for this information, particularly from lenders who are not currently lending to agri-SMEs, but for whom, with the right information, this presents a valuable prospect. Those that are maybe have more of a broader lending strategy, and for whom this, as I said, might be kind of a first foray into lending to agri-SMEs as they start to develop or have available information to refine and direct their strategy a little bit more concretely, whereas our research is showing that because of this lack of information, there is a level of kind of generality and flexibility to lenders' strategies in agriculture that we hope, our hypothesis is in the presence of a better set of information that they're able to make a bit more specific and directed.
Thank you, Henry. I hope I still remember the question. Yeah. One is the validation, and I think, just going back to COVID, I think COVID, and I really agree with that, Paul, it requires us to think differently and to really innovate. And that's why I think we need to, now is the time more than ever, to really align our innovations. And that's why I also like this call to really see how everyone is talking about the ecosystem and ecosystem approaches, and these bankability metrics are exactly that. It might be only some metrics, but it really is designed to link different parties together, and I think that that alone will create new things for all parties involved. The validation part, so how do we validate this information? Of course, you're correct, Yaria, that it still needs to be used, but we have validated it against portfolios of CSAT members, We have validated it with lenders, but we've also cross-checked it with the scope data. And for the last 10 years, we've been collecting this scope data, and we've done over 4,000 assessments in all those years. So there we have really looked at what are the drivers behind agri-SMEs that do have loans. And with that, we connected with the research that we've been doing together with CFI, and that really shows that it's not only the financials and not only what kind of contracts they have, but it's also very much the governance structure. So how are they managed? And that is a very difficult thing to gather information on. So I think that's how we think it will go forward. But of course, it will be fine-tuned in the next year and the year after. This is a thing that needs to grow, and it needs to be used, and we need to get feedback from a lot of parties. I hope that answers. Oh yeah, who's going to pay? I think the bankability metrics will be published, so that's open to everyone to use. And the portal that we've been talking about will have a business model behind it because it needs to sustain itself. But it will be, of course, very low cost or no cost for the agri-SMEs. But maybe lenders will need to pay to get a quality pipeline. But I think that's worth paying for. And I think what also the business model will also, that portal will be able to be used by a lot of, we as Scopus Site will be one of the contributors of data. And we hope that our pipeline, we can put that one-on-one on that portal, but others can also use that. So the whole business model behind that hasn't been developed yet, but we do want to stimulate others to use that portal and really be that bridge for everyone.
Thank you very much, Maries. And with our best wishes for this great initiative, unfortunately I have to close the Q&A session, but I would like to invite the people of the audience that have brought many questions, but unfortunately we cannot handle all. If you can contact also the organizer, and so we can put you in touch directly with the presenter for more specific question and detail you have asked in the chat. So I would like to thank the organizer and the presenter for this very interesting hour, and I'm leaving the floor to Pranav for the closing remarks. Thank you very much, everyone. Pranav, we don't hear you, or at least I don't hear you.
So it doesn't seem like we have Pranav. Yes.
Yes.
Okay.
Thank you, Pranav.
Good. No, I think listening to all these wonderful presentations, I think my mic decided that Pranav, you're not needed. They've done your job. So get off. So that's what happened. Anyway, so a big thanks once again to all the wonderful speakers for sharing their great insights into their experiences. And a couple of things, it's made my job slightly tricky, but having worked in microinsurance and microfinance, let me make a micro summary and try and encapsulate most of the major points. So one of the major things that I think came out quite clearly was the emphasis on partnerships and the need for an enabler. Now, whether that enabler is the working capital, as Anil mentioned, whether that enabler is the bankability matrices that are being developed that will bring and create linkages between the SMEs and the finances, or whether it is the role that MIFA is playing in ensuring that the various players are able to come across, and the aggregator, as Anil mentioned for Sanmati. I think there is this great need of having an intermediary enabler to ensure that the language of the lender and the language of the agri-SMEs finds a common ground, and there is a common linkage that happens. The other very interesting part that came up was the role of guarantees that can enable new engagements. So it's not just for maintenance in the times of COVID, but also facilitating new players to come in and play a role, the role for risk capital pool that can help with client risk management, as well as linking up with the guarantees. I think those were interesting issues that came up. NIFA brought up a very, very important role for protecting the agri-value chain and the role that insurance can play in that and the different kind of insurances that are there. This may add on a cost to the entire operations, but I think this is something that we can nicely follow because, as we mentioned in the first talk also, that insurance has a enabling, facilitative, productive role to play than just the protective role. And I think Rachid's presentation highlights this role quite effectively. The other issue around sustainability of such financing mechanisms, how can they be run in the long run? So is there a role for subsidies? That is something that we can look at. Also the fact of helping the lender to understand the agri-SMEs better. Across the presentations, we saw organizations playing a very, very effective role in giving, I shouldn't call it a comfort level, but at least enabling the lenders to be able to understand ground realities and then alter their offerings or align their offerings to what is actually required. So this entire client-centric approach is the other theme that I thought came across very nicely during the discussions. And I guess it is using these issues around understanding the issue from the eyes of the customer, enabling organizations to talk the same language, making funds available, not just for funds and the interest sake, but also as an enabler for not just risk management, but also facilitating a better productive mechanism. These are all issues that kind of are very important and exacerbated during the COVID-19 times, where the need for these organizations on both sides, the supply side and the demand side, to talk to each other is even greater. We look forward to this aspect developing even more and developing over a period of time, not only during the COVID-19 crisis, but also after that, because it has kind of set the groundwork for a greater partnership to happen. So once again, let me thank all the speakers for their inputs, and Michael, Ilaria, Stenio, everybody else for managing to get all these wonderful speakers together and enabling the entire process forward. A few things that I would like to emphasize on, as Michael mentioned, this is a part of our series that we are doing together. So do please be on the lookout for the next round that will happen in November. And feel free to peruse all the partners' websites. And more importantly, we want to learn more from you as to what more you want to hear from us. So once we close the session, there will be an evaluation poll. Please take a couple of minutes to answer those evaluation polls and get back to us so that we can incorporate that in our future events. At this juncture, you can see the poll on the right side. Please go ahead and answer. And while you answer that, let me once again thank all the attendees for attending, for all the questions that you've sent in. We will certainly try and link you in our role as enablers with the participants so that you get answers to those questions. A few of them have already been answered. But we look forward to continuing these discussions, not only with the speakers, but also with all the attendees, and thank everybody who attended this event for their time and inputs. Thank you once again.